Hi, everyone. My name is Dustin Miles. Super excited to have Cody with us today. I've known Cody for a few years, mostly from afar, but we've kind of seen each other, at conferences and things like that. And anyways, welcome, Cody. Excited to have you, and yeah, love to if you want to kind of introduce yourself, and then we'll hop into it.
Yeah, Dustin, I appreciate you having me, and it is crazy to look back. We've been acquainted now for close to 4 or 5 years, and
Yeah,
man, time does fly when you're having fun, right? But yeah, as you mentioned, my name is Cody Laughlin, managing partner over at Blue Oak Capital. We're a Houston-based multifamily acquisition firm, working with accredited investors to buy, multifamily and industrial assets here across Central Texas, and we've been in inception since 2019. My real estate investing background very similar to many of your audience or listeners. I started in 2010, actually by accident, became an accidental landlord, and explored some various strategies within the residential investing space. But after a few years of making some bonehead decisions and some taking some hard knocks, I realized that there really wasn't the economies of scale that I was looking for in residential real estate. So made the transition to multifamily in 2019. Met my first partner, and we started building our infrastructure at Blue Capital, and we you know the
awesome.
rest is
Yeah.
history, as I
Well,
like to
cool.
say. So
And I don't know if you'd mentioned here, but where are you located?
we're based in Houston. Yeah. So based in Houston, and this is where we like to focus: Houston and across Central
Awesome.
Texas. So
And
great market.
then so kind of curious. You've been in the game for a little bit, and you've probably worn a few different hats, or maybe you've kind of been able to stay in your swim lane. But at least for me, when I started out, I wore a bunch of different hats, and still wear a few, but probably a little less these days, and starting to probably as we kind of grow get a little more specialized. But yeah, just kind of curious, what's your role as a GP? What's that been? Asset manager, capital raiser, anything in between. And then what do you like to do?
Sure. Well, going back to the original comment, like you said, yeah, I started out doing a variety of different things in multifamily because, like everybody, started from zero, had
Mhm.
no real extensive knowledge or fundamental understanding of the business, and I knew I needed to overcome that barrier, right? And so, one of the best ways I feel like anybody should explore to overcome those barriers is passively investing. So, I started out as an LP, invested with an experienced sponsor in a great market, and coincidingly while I was doing that, I was also working on my education, right? Trying to understand the business and the fundamentals, the didactic piece. And then my partners and I, we started building out our infrastructure, which allowed us to create a network to where we felt confident to go add value to another sponsor. And so, we worked for about 2 years almost to uh, kind of build our brand and our network to where we could raise capital. And we said, okay, our first entry into multifamily needs to be by way of co-GP, right? We're going to co-GP with other experienced operators, learn from their experience, both on the asset management side and acquisition side. And then we'll take that experience and translate that into our own acquisitions. And that's exactly the framework that we followed. So we co-GP'd several deals before we landed our first acquisition. And it was through that transition and through that experience is what, for me personally, what I discovered that I love the most about the business is the acquisition piece, right? I love going out, touring the deals, working with brokers, working with vendors, peeling back the onion and learning everything about a new acquisition and getting it from start to close. I just enjoy the thrill of that. And so that was the really big aspect that stood out to me. So as far as my role at our team here at Blue Capital, I'm the head and director of acquisitions, and
Cool.
that's the
That's
lane I
awesome.
like to
And
play in.
that's
So
it, I don't know. It's always kind of satisfying when because I remember we'll talk to a bunch of different investors. They're like, I want to be a general partner. I want to be a GP. Like, what do I do? And we're always like, well, what do you like to do? And they're like, well, I don't know. I want to do them all. so, anyways, that's good for you that you've kind of figured out. You're like, this is my lane, and kind of go from there. So, Well, just kind of curious with you and your partners and all that. We're always trying to set ourselves apart and once an LP kind of gets, I think, into to my impression at least, once they if they do get into the ecosystem and they go to a conference or two, they start to see, they're like, oh, seen some of these people before. And so I imagine a lot of our LP list, or there's a decent amount of crossover and things like that. And then not only that, but when people are looking to invest, obviously there's a stock market and there's some other options out there, but just kind of curious, if there's anything that you guys can think of that kind of sets yourself apart, from other folks. I know for us, we on our end, we've done meetups and things like that, webinars, trying to, really just try and give and so hopefully, later down the road, if it seems like it's for them, they kind of remember us. But yeah, love to hear what you guys kind of do to set yourselves apart.
Sure. I think the thing that sets us apart is our authenticity, our integrity, and our transparency. We were talking briefly before starting the recording, right? That there's challenges going on across the market space, and certain deals have their own sets of challenges, and we're not immune to that. And so, the one thing that I can at least say proudly is we've never hidden or shied away from that. Who you see on social media or who you see us at live events, that's the same that we are in our day-to-day operations. Who you see is what you get. And that's how we operate with our investors. We're very transparent. We disclose any and every details that's irrelevant to their investment and their, relationship with us. And I think that's one thing that really sets us apart, is because regardless of good or bad, and again, going back to our comments before the show, is, you know, things aren't always
Yeah.
roses and rainbows and sunshine, right? So, right now, when things are tough, it's really, really important that you do communicate transparently with your investors and such. So, I think that's the one thing that really sets us apart, and that we're at least proud to say that, we operate with a high degree of
Awesome. No, that's
integrity and
great.
authenticity.
Yeah,
So,
I think I've LP'd in other apartment deals, and then I've LP'd in oil and gas and some other stuff. And there's been a few times where not so much the authenticity and all that, but just kind of going to the communication piece. I've had some deals and some sponsors where the the returns were okay, but like the communication piece was not good. And I'm like, I don't know if I'm gonna, work with you again, because, I couldn't, it just never got back to me. And so it was kind of, interesting to see that. Then there's some other guys where, I'm in a ton of deals with them because their communication is awesome. And, some of the deals have been really good. Some have been okay, but the communication's been really good there. So, um, kind of curious, what you guys are, you mentioned, Houston and the kind of central Texas, I think. Curious what you guys are looking for in a deal, if that has maybe, changed, over the last year or so. But yeah, just kind of curious what your deal block box looks like.
yeah, our investing thesis has been revised several times throughout the last several years. We started out similar to most, where we were looking for more of your kind of C class value add strategies. I think that's
Hmm.
where most people try to cut their teeth, and we do have a couple of deals of like that in our portfolio. But what we realized back in 2022 is that the value separation between Class A and Class C properties was really contracting, right? I mean, really compressing. So obviously, everybody knows cap rates were at a historic low, and you could buy a C class property for nearly the same cap rate you could as a Class A. And so when we saw that, we started to really make a pivot more towards your core plus product. More of your better quality investment opportunities and such. And so now now where we are and given this part of the cycle where we're seeing a lot of value decline and value deterioration, where we think that the biggest opportunity is going to come
Mm,
out is that C class space, right? That workforce housing space where people are either over levered, maybe they have short term maturities that are coming up. I think that's really where there's going to be some compelling buying opportunities that are risk adjusted, and that's what we haven't seen in a while. So to answer your question, we kind of look across the entire spectrum of Class A to Class C product right now. We still believe in the value of good quality investments that you can hold for the longer term, but we are keeping our eye on some of those more compelling
got it.
buying
Okay,
opportunities in the
interesting.
value add space. So.
Well, cool. I know. I'm sure you guys talk to a lot of LPs or limited partners. Sure you get lots of interesting questions as we have. And there was one question that an LP asked, and they were like, what should I be asking you? And so kind of replied to him, but yeah, just kind of curious your viewpoint of if an LP is talking to you, and just what kind of questions should they be asking you about the deal, or about just everything in general. So
Sure. I think most importantly, especially now more than ever, it's what's your operational background, right? What's your track record? And your track record, when you're talking about that, shouldn't include just all the deals that were going well. It should also include the deals that aren't going so well or are having some trouble. And how are you managing through that? How are you dealing with those headwinds? What are you doing to mitigate those challenges? And what are you doing to help your investors through that, right? And I had a guy that I have a tremendous amount of respect for, probably somebody that we know both mutually know, Spencer Hilligoss, um, tell me a couple of years ago, he wants to work with sponsors that have had distress or have had a situation where they've had difficult times, because that's what makes them battle tested, right? That's where you really learn as an operator how to deal through challenges, not when times are just good. And so I think that's what really investors really should be leaning on right now is what's your operational background and track record, and really focusing in on the deals that didn't go so well and how you handled that. And then looking, of course, at the deal specifics and the fundamentals of that investment offering. But it comes down to the people
yeah,
first. You got
yeah,
to
for
know who you're
sure.
partnering with for sure.
Well, curious, what you kind of like most about multifamily, and then if there's maybe something you don't care for as much, but yeah, just kind of curious to get your take.
Yeah, so multifamily is a great investment strategy in a vertical, right? I mean, it's got great economies of scale, great fundamentals. Obviously, one of the big drivers behind multifamily as an asset type and class is the need for housing. There's a significant housing shortage, and we're seeing that across the entire nation, not just here in Texas. So that in itself is compelling when you look at an investment strategy that has long term fundamentals. And so I like that. I like the economies of scale. Right, there's a lot of value in being able to go acquire 100 and 200 units under one transaction versus trying to go do 100 to 200 300 single family homes, which most people try to do and realize it's a bigger undertaking than what they're prepared for. um, and so of course, and we like working with teams. Obviously it's a team sport, and I think in order to do this business at scale, to acquire these larger multifamily properties that you and I do, you have to have a good team around you, and we like that team aspect. So as far as what I don't like about multifamily, aside from the capital markets right now, um, I think the one thing that is difficult to adjust to when you get to multifamily is everything moves at a snail's pace. It feels like, right? Operating multifamily properties, operating a small business, and um, things tend
Yeah.
to move very slowly. And that can be good and that can also be bad, right? So it's kind of like driving a big cruise ship. It's not easy to turn around once you're kind of steadfast. So that would be the one thing that I was is the biggest adjustment for me starting is just it moves very slow. It's a
Yeah,
long
it's
term
it's
game. So
interesting. We'll talk to passive investors, or some of our GP partners, and they're like, well, you changed out the manager. Where's 95%? We're like, well, it doesn't quite work that way. There, it takes a little bit of time, and
Nope.
there's cleanup involved. And it's funny you mentioned that. We always kind of equate it to, also kind of this, cruise ship that, you just want to make sure your trends are in the right direction. And nothing, for the most part. I mean, things can happen sharply, but for the most part, it's a slow, gradual kind of trend. So, anyways,
Mhm.
I curious. Have you were you part of a mentoring program, or just kind of what? Yeah, I know you sound like maybe you started out in single family a while back, but did you get into a mentoring program or coaching program, or partner up with people, or what? How'd you kind of first get in?
Yeah, yeah, we sure did, man. I mean, we started when I started multifamily, it was a lot of independent and self-study, just trying to, learn as much as I can independently, but realizing very quickly, like if we're going to do
Hmm.
this successfully, we really need mentors to help us along the way. So we
Oh, that's
joined the Jake and Gino
cool. Hmm.
community, Wheelbarrow Profits Academy in early 2020. Still part of that great community, also part of a couple of great masterminds, that Make It Happen Mastermind, and then Apartment Educators based here in Texas as well. So we try to get ourselves and plugged in and involved as many you know great quality groups as we can and mentors. And I tell myself even 5 years now, there's still something new to learn every day in this business. So I think always looking for opportunities to find new groups that we can plug into and benefit
Yeah,
from and learn from others.
kind
So
of along those lines. I remember watching a webinar. It was right after kind of COVID hit, and I don't remember exactly who was on the panel, but it was guys with really large portfolios. It was the guy who leads Night Vest, and then out, some other big names that we'd all know. I just can't remember because it's been a few years, but it was interesting to see. Those guys were, it was very, very humbling, because you think like these guys who have billions of dollars assets under management, you would kind of know, what's going to happen, and with the direction that they're going in, and all of them on the panel, and like I said, they own billions of dollars of stuff. They're like, I don't know, we'll wait and see. And so I think just the ability to be humble and coachable and teachable, and it's the people that, kind of those lone in this business. I think the people that are kind of your lone rangers, and kind of folks that think they know it all and all that. Man, it's this business can really humble you very quickly. That's for sure. So yeah.
that's a true statement.
Uh, um, are there? I don't know if you're much of a reader, or listen to audiobooks or podcasts, but would love to hear, or if there's any books or audio. I'm more of an audiobook guy myself, but if there's any books or audiobooks or podcasts that you really like, and then if there's one where you've read it or listened to it more than once, then very interested in that, just because I don't know, if I'm listening to it more than once, then I really, really enjoyed it. So
Yeah, for sure. So I enjoy both reading a good paperback, and but I also and predominantly
mm,
more of a podcast listener to now. Just
yeah.
I'm out in the field so much that in similar to where you're in Dallas. I mean, Houston, everywhere is a 45-minute drive. So get a lot of
Yeah.
time in the mobile office, as I like to say. So do a lot of podcast listening. But I do have three particular podcasts that I listen to every week. The Trepwire podcast. It's a good insight into
Mhm.
the commercial real estate market as a whole, both from a financing side and just general macroeconomic side. I
Mm.
highly recommend people tuning into that one.
Yeah.
The Rate Guy podcast is fantastic. JP Conklin over at Pensford. Listen to that one every day. He's got some very good insights as to what's
Yeah.
driving the interest rate markets and such, which is obviously very
Just don't be
relevant
a
to what
Cowboys
we're
fan if
we're
you
in right
want.
now.
Yeah.
Don't be a Cowboys fan if you're a follower. That's
Yeah.
right.
Yeah.
He will have no shame in bashing you.
Yeah.
which I'm not a Cowboys fan. So sorry, guys. Uh, the third one that I enjoy
Mm,
listening to every week is the Bloomberg podcast, the Bloomberg Surveillance, and that just kind of covers all different segments of macroeconomics and investing landscape, which both indirectly and directly tie into our business as real estate. So I like to keep my finger on the pulse on what's happening in just the general macroeconomic landscape. So those are the three podcasts that I typically listen to routinely every single week without fail. And then as far as paperback books, it really just depends on which season I'm in
mm,
at my given point of the year. If I'm trying to learn a new skill, I really focus in on trying to finding books and resources that really help me hone in that skill. Big example of that was last year. I dove head
mm,
in with Alex Hormozy, and his $100 million lead book and his $100 million offer book. Trying to figure out different ways to structure offers and generate
mm,
leads in a way that makes you attractive, right? So Hunter Thompson's another big follower years ago that got me started raising capital for real estate. His book, wanted to learn more about capital raising and building that infrastructure. So really dove into that. So it really just depends on which season I am in my life and what skill I'm trying to acquire. So right now I'm reading the
mm.
7 Habits of Highly Effective People. It's a great book. So I'm on habit
Cool.
4 out of the 7 right now, which is great. Um, and then as far as books that I've read routinely or
Mm,
repeatedly, The Miracle Morning by Hal Elrod. Um, Always a great read, especially if you're trying to really figure out how to take control of your day and structure your time effectively. Highly recommend that one.
awesome.
I've read that one a couple times. So
So what we're earlier in 2024, however you kind of want to answer this, just kind of how do you see your business in the next 5 years, or how do you see kind of maybe even this year just playing out? If you want to take either or both, however you want to answer that.
sure. So short term, right now, we're just focusing really heavily on our existing portfolio. We do, like I said, we're not immune to the dynamics of this market right now. So really, just trying to do what we can to control what we can control to get through this part of the cycle. And so, really focusing on that. But long term, we do still see ourselves expanding and growing substantially. We want to get to, $100 million in acquisitions, and then from there try to get to a path of $1 billion in assets under management over the next decade or so. So kind of a bigger, heftier goal there. But we really want to focus on just making quality investments and not necessarily working so much to just grow exponentially,
Right.
but more so
Yeah.
just grow
Yeah. I
strategically.
I
So
think I mean, I'm all for growing, but yeah, I agree. We on our end, we want to be strategic, and I don't know. We're not, the group to, oh, we're gonna buy, X thousands of units this year, and we just want to, do what makes sense. So, any advice for someone that is wanting to be a GP and kind of get their foot in the door? Any advice for someone to kind of get more on your side of the table?
absolutely. And this kind of goes back to our conversation earlier, right? If you're just getting started and you have no idea on which skill set that you have to leverage, or which lane that you really want to stay in this space, I highly recommend for people to passively invest first. Get invested, get into a deal, start learning the business from the investor side, which is a huge learning opportunity there. I think a lot of people discount the value you get from actually being a passive investor with other operators. So I highly recommend people getting started with passive investing. But then as you go through that experience, try to figure out what skill sets you have, right? What are you? Are you a financial, analytical mind? Are you more of a investor relation, customer service type mind? And once you really figure out what those skills are, lean in heavily on that, hone those skills, and then go market those skills to other operators and add value to them by leveraging those skills. And I think that's a good way to kind of find your way
Awesome.
into
Well,
your
cool.
first opportunity.
How do people get a hold of you? Feel free to give email, website, whatever is best for you.
Yeah, I love when people direct with me or connect with me directly, excuse me. So just shoot me an email, Cody at Blue Oak Invests, that's plural.com, and reach out to me. Let me know you heard me on the show, and I'd love to reach out to you and see
Okay,
how we can help you
awesome.
along
Well,
your
great
journey.
seeing you as always, and really appreciate your time, Cody. And I'm, I'll be in Houston for too long, so love to get together. But appreciate your time, and have a great day. Thank you. See ya. Bye.
Thanks, Justin. Thanks, soon.